Have you been selling puts and you're not really even sure who the players in the market are? Like, who's buying your put and why would they do that? Or have you been thinking about trading options and you just don't know where to start? I have to tell you, it's so much easier than you think it is. This video is going to break it down ridiculously simple for you. Now stay until the end because I'm going to walk through a trade using my screen and show you exactly what to do. So let's start with who's in the game here. So we have the market and the market makers, and then we have someone who buys a put and someone who sells a put. Now the person that buys the put, they fall into one of two categories. They either own a bunch of stock and they want to hedge their position, meaning they don't want to lose all their money in case their stock crashes. Let me give you an example. Let's say Jane Smith owns 1,000 shares of Apple. She doesn't want to lose all her money if Apple drops like a rock. So she might buy a put as protection. Kind of like how we buy car insurance in case we crash our car. We don't want to lose the value of our car. This is the same thing. So she pays a premium, and what she's getting in return is that someone else is going to buy her stock at a certain level. So for example, if the price of her Apple shares are $100 a share right now, she might be saying to herself, I'm okay if the stock fluctuates a little bit, but if it goes less than $90, I really don't want to lose that much money. So she might buy a $90 put, giving her the right to sell those shares at $90 to someone else if it starts to crash. So that's the first type of put buyer. The second type of a put buyer is someone who basically gambles. Let me give you an example. Maybe I think Apple is going to go down because I think it might be overvalued right now. But I don't actually want to short the stock because that has a lot of risk and I don't want to lose a lot of money. So I could buy a put option for a very small amount of money, let's say $100 or something. And if I'm right about the direction of the stock, if it's going to go down, and I'm also right that it's going to go down quickly and significantly, I can turn that $100 into $500 or more maybe. So those are the two types of people that buy puts. Now, who sells the put on the other side? People like me, I sell the put on the other side, and hopefully people like you who are watching this video to learn how to create income for yourself. So you are going to take the other end of that trade. And here's how you do it. First, you identify a stock that you'd be okay buying if the price went down, like Apple, for example. Apple is a super strong company. It's one of the biggest tech companies in the world, and it's not likely to go out of business anytime soon. So I look at a trade and I say, I like Apple, but I wouldn't want to pay $100 for it or anything, but I wouldn't mind paying, let's say, $80 for it. I sell an $80 put. I take in the premium that the other person is paying, and I keep that no matter what happens. And I'm going to buy those shares if the stock crashes below $80. Well, it's kind of like a win-win for me because I'm making money regardless. I keep the premium no matter what happens to the stock. And worst case scenario, the stock goes down and I buy a good quality company that I like anyway on sale. Now you might be asking yourself, who puts all these people together? Who puts together the buyer and the seller? Do I have to actually go find the buyer of this put contract that I'd like to sell? The great part about it is there's something called the market and market makers. So the market and the market makers organize all these put buyers on one side and put sellers on the other side, and they match them together electronically and automatically. So you don't have to find the person. And when you as a put seller are looking at a trade, basically you're seeing what the current price is right now. So there's already buyers lined up to buy those contracts at that price. Don't worry, I'm gonna walk through using my screen to show you click by click. Let's jump into my screen and let me show you now. Blah, blah, blah. Okay, so we're gonna look at Apple as an example. And I know I was using the number of $100 per share earlier because I was trying to make it easy for you guys to understand. But Apple is actually trading at $274. We see the price right here. Now there's lots of different contract dates that we can choose to trade, but I'm going to make it easy. I'm just going to choose a date that's 1 week out, March 4th. So I'm going to click on March 4th, and it opens up this big mess of numbers on my screen. Holy cow. Now don't worry, don't get confused. I'm just going to highlight the important things. The price that we want to pay for the shares are down the middle here. That's called the strike price. That's the price under which the stock would have to drop in order for us to buy those shares, and then we would purchase the shares at that price. So as I said a moment ago, Apple is trading at $274 per share. But let's say that we only want to pay $265 per share. we want to get about a $10 discount. I mean, why would we want to pay retail price if we don't have to? So we see some numbers on this line. Now, puts are on the right-hand side of my page here. And there's some confusing terms called bid and ask and last, etc. But basically, it just means this. The bid is the price, 0.96. That's the price that there's already buyers lined up to pay for this particular contract. So if you want to put a trade in right away and make a guaranteed amount of income, you would just click on this bid and it pulls up a sell box for you. Now you can sell one contract, you can sell 2 contracts, 3 contracts, as many as you'd like. You just have to have the money in your account to be able to purchase those shares. And here is where the price is. So if I was to confirm and send and put this order in, that means I would be selling one $265 put, and $96 would get dropped into my account right then and there. Now here's my commitment for that money. If Apple drops below $265 before this date, March 4th, I may have to buy those shares at $265 per share. Well, that's cool. And like I said earlier, it's a win-win because I like Apple. Apple's trading right now at $274, so I would be getting the stock at a discount. It's that easy. Now, I'm not going to go into detail and talk about ask or last price or delta or implied volatility. I have a lot of other videos that go into more detail. This video is just meant to help you understand what is a put, how do I sell it, who's buying the contract on the other side, how does that all work? And the fact is this, trading can be as hard as you make it or as easy as you make it. And I try to make it the easy way, especially for viewers just like you. So what did you guys think? Trading can be super confusing and super overwhelming, especially if you're new. Sometimes we go down what's called a rabbit hole, and there's so much information. I start looking at this one thing, then I start looking at this other thing, and then I start looking at that other thing, and then I'm spiraling down that rabbit hole, and all I have at the end is confusion. It does not have to be that confusing. You choose a stock that you like, you choose a price at which you're okay to buy it, you put the trade in, you collect the cash. If the stock goes down, you buy the shares on sale. If the stock doesn't go down or goes up, you don't buy the shares and you keep the cash anyway. And then next week, you do the whole thing all over again. Rinse and repeat. It's that simple. Once you learn the basic foundational pieces of options trading, it literally takes like 15 minutes a day. You're not looking at computer screens all day. You're not tied to your cell phone when you go out and do things. You're not having sleepless nights, worried about where your stock's gonna go, and you're creating yourself cash on a regular basis. Let me know in the comments what other gig can you do in today's society that takes 15 minutes a day, creates weekly cash, and you can do that over and over again. If this video helped, smash the like button, subscribe to the channel. I'm putting up new videos every single day talking all about how you can create income for yourself on a regular basis and just perhaps change your life. See you on the next one.